The renomination of Jerome Powell as the U.S. Federal Reserve Chairman has been welcomed by the crypto industry, as analysts believe it signals continuity of policies related to digital currencies. What would Jerome Powell's second term mean for crypto? This video is brought to you by Answerly, a question platform that pays you for adding high-quality answers on different questions. The users are rewarded in Answerly tokens, which they can easily convert into dollars or any other cryptocurrency by using one of the exchanges mentioned in the description. Hello and welcome to our YouTube channel. In today's video, we'll be talking about Jerome Powell triggering cryptocurrency bull run in December 2021. Cryptocurrencies have seen a meteoric rise in the last couple of years, helped by low interest rates and risky bets from consumers with high saving rates. Powell's reappointment, analysts say, raises hope that easy monetary policy will continue. Jerome Powell appears certain to serve a second term as chairman of the Federal Reserve, having been nominated for the U.S. Central Bank's top job by President Joe Biden. The president nominated Lael Brainard as the Fed's vice chair, putting an end to speculation that she would take over the reins from Powell. Like Powell, Brainard has previously voiced concerns over the counterparty and financial stability risk associated with private cryptocurrencies such as Bitcoin. However, while Powell's commitments on a digital dollar have been accompanied by hostility toward private cryptocurrencies and stablecoins, Brainard has advocated the development of a U.S. central bank digital currency, or CBDC, for its economic and societal benefits, such as improving access to the financial system. She noted more than a year ago growing momentum behind the creation of a digital greenback after Facebook, now renamed Meta, embarked on a journey to pursue the development of its own digital currency, once named Libra, now renamed Diem. Under Powell, the Fed cut interest rates to near zero in March last year as the COVID-19 crisis began to unfold. Powell's chairmanship of the central bank also just last month saw a 6.2% year-on-year surge in the Consumer Price Index, the biggest increase in inflation in more than 30 years. The specter of inflation has gained increasingly widespread recognition as having helped to buoy Bitcoin as a store of value and an inflation hedge. Before we move on, make sure to like this video, smash the subscribe button, and click the notification bell right now because you don't want to miss Jerome Powell is going to trigger a bull run in crypto in December. What does it mean? Under Powell, the Federal Reserve's stance in crypto and the creation of an American CBDC has been distinguished by an attitude of caution. He has demurred on developing a native digital currency, leaving the private sector to do much of the legwork, and has taken a dim view of the crypto industry, saying earlier this year that it was little more than a vehicle for speculation. Meanwhile, China has sprinted ahead with pilot programs and is expected to roll out a fully fledged version of its digital yuan during the Winter Olympics, which Beijing is hosting in February. It has also banned all other cryptocurrencies and cracked down on the entire digital asset industry as part of its efforts to ensure the primacy of its CBDC. But as Powell prepares for a second term at the Fed, he appears to be softening his stance on crypto. In recent comments on stablecoins, he appears to have shifted from hostility toward a preference for regulation. He has even described them as akin to unregulated money market funds or bank deposits, a marked departure from his previous characterization of cryptocurrencies as purely speculative assets. Whatever one's views on cryptos in general and stablecoins in particular may be, Powell is right to be cautious about letting completely loose an industry that so far has regarded regulation as more like a noose than a leg up. In terms of crypto policies, economists believe both Powell and Brainard have very little differences, if at all, on matters of digital asset regulation. Both seem to be wary of cryptocurrency's potential to disrupt financial stability and therefore do not subscribe to the idea that they should be given a free run. Early last month, Powell had said he didn't wish to ban cryptocurrencies but believes stablecoins need more regulatory control. Talking about stablecoins at an event in early October, Powell said, quote, "They're to some extent outside the regulatory perimeter, and it's appropriate that they be regulated. Same activity, same regulation." Biden picking Powell for another term comes as the recognition of Powell's handling of the U.S. economy during the pandemic. In a statement, Biden said, quote, "That success is a testament to the economic agenda I've pursued and to the decisive action that the Federal Reserve has taken under Chair Powell and Dr. Brainard to help steer us through the worst downturn in modern American history and put us on the path to recovery." Both are mainstream Fed institutionalists who would want a strong role for regulators in overseeing crypto and making sure it doesn't cause financial stability risks. CoinDesk quoted Managing Director of Capital Alpha Partners, Ian Katz, in a report a few days back. Brainard has been a member of the Board of Governors at the Federal Reserve since 2014. Recently, she has been associated with Fed's attempts to issue a central bank digital currency, or CBDC. She's also been speaking frequently on cryptocurrencies over the past few years. However, Brainard's support for CBDCs came after Facebook, now Meta, proposed stablecoin Libra in 2019 and the pandemic that revealed digital currencies' potentials for contactless payment and serving the unbanked. Cryptocurrencies initially ticked higher on Monday on news of the appointments before profit-taking dragged them lower. The downtrend continued on Tuesday, with Bitcoin and Ethereum trading a little over 2% lower, each at USD 55,885 and $4,106 respectively. Analysts believe the current pullback is normal after an extraordinary bull run. Matthew Dibb, Stackfund's chief operating officer and co-founder, said the recent decline represents a typical bull market correction and may extend further. There is mounting concern that inflationary pressures will cause a drop in risk assets, including Bitcoin. We believe it'll happen at some point, but it's not exactly imminent, Dibb said. Action in traditional markets indicates potential for a deeper drawdown. The reappointment of Jerome Powell as chairman of the Federal Reserve by U.S. President Joe Biden on Monday reinforced bets that the central bank would hike rates faster to control inflation. U.S. stocks erased early gains, while gold and silver fell after Powell's reappointment. The dollar index hit a 16-month high of 96.60 early Tuesday, and the U.S. two-year yields rose to 0.63%, the highest since March 20th. Bitcoin flipped from support at $57,653 into resistance, with the firm close under the set level on Monday. And the breakdown is backed by a below 50 or bearish reading on the Relative Strength Index, or RSI, and so another leg lower cannot be ruled out. Minting M said the immediate support is seen at $53,000, while Stackfund's Neo cited $50,000 and $51,000 as key support zones. But Bitcoin bull Mike Novogratz warns Jerome Powell's second Fed stint could bring pain for crypto prices. Billionaire investor Mike Novogratz has said Fed Chair Jerome Powell could be about to slow down the crypto market now he's been dominated for a second term. Novogratz said, quote, "Macro story has changed a little bit and that people are getting pretty bearish on cryptocurrencies. Powell gets reappointed, and so maybe it allows him to act more like a central banker than a guy that wants to be reappointed," Novogratz said on CNBC's Crypto Night in America. "And we have inflation showing up, in pretty bad ways in the US," he said. "And so we can see, is the Fed going to have to move a little faster? That would slow all assets down. It would slow the Nasdaq down. It would slow crypto down if we have to start raising rates much faster than we thought." Powell has overseen the biggest monetary stimulus in U.S. history to help the economy cope with the coronavirus crisis. But the Fed is now grappling with the strongest inflation in 31 years. It has already trimmed the rate at which it's purchasing bonds, and minutes from its last monetary policy decision, released Wednesday, showed officials are open to dialing down quantitative easing even faster. Financial markets show investors now think it's the Fed could raise interest rates in May. Bitcoin and other cryptocurrencies such as Ether and Dogecoin are among the many assets that have been lifted by the flood of money from the Fed in the last year and a half. Novogratz has previously predicted Bitcoin would hit $100,000 by the end of the year, but said that now looks unlikely. Bitcoin was up 3.83% on Thursday to $58,667 on the Bitstamp exchange. However, the former hedge fund manager, who now runs crypto investment company Galaxy Digital, said there is lots to be excited about in the world of digital assets. The amount of institutions Galaxy sees moving into this space is staggering. I was on the phone with one of the biggest sovereign wealth funds in the world today, and they've made the decision on a go-forward basis to start putting money into crypto. I've had the same conversation with big pension funds in the United States, he said. Could it really be a bull run in cryptocurrency in December? What are your thoughts about it? Let's know your thoughts in the comment section down below. If you like this video, make sure to smash the like button and subscribe to this channel. To learn more about Answerly and Answerly tokens, check out the links in the description.